Hi, I'm John with Tax TV, here to discuss different types of tax-exempt organizations. There are many types of organizations that qualify for exemption from federal income tax. To be considered tax-exempt pursuant to Section 501c3 of the Internal Revenue Code, a company must be organized and operated exclusively for exempt purposes that are charitable, religious, educational, scientific, literary, testing for public safety, fostering national or international amateur sports competitions, and preventing cruelty to children or animals. None of the earnings of a tax-exempt organization may be for the benefit of private interests, such as any private shareholder or individual, and the entity must not be an action organization, and that it may not attempt to influence legislation as a major part of its activities, nor participate in any campaign activity for or against political candidates. For the IRS to recognize an organization's exemption, it must be organized as a trust, a corporation, or an association. Let's take a look at some of the types of 501c3 tax-exempt organizations. One of the most popular is a charitable organization, classified as either a public charity or a private foundation. Public charities can include churches, hospitals, qualified medical organizations affiliated with hospitals, schools, colleges, and universities. Public charities can have an active program of fundraising from many different sources, receive income from the conduct of activities in furtherance of the organization's exempt purposes, or actively function in a supporting relationship to one or more existing public charities. In contrast, private foundations typically have a single major source of funding and have as the primary activity the making of grants to other charitable organizations. Another popular tax-exempt organization is a fraternal beneficiary society. In order to be considered exempt, this type of organization must have a fraternal purpose, meaning its membership is based on a common tie or the pursuit of a common object, and it must have a substantial program of fraternal activities. It must also operate under the lodge system and must provide for the payment of life, sickness, accident, or other benefits to its members or their dependents. A third type of tax-exempt organization that is fairly common is an employee benefit association or fund. For example, a voluntary employees beneficiary association under Internal Revenue Code Section 501c9 is an organization set up to provide benefits for members or their dependents. To be considered tax-exempt, the organization must be a voluntary association of employees who have an employment-related bond, such as a common employer or coverage under a collective bargaining agreement. The organization must provide for payment of life, sickness, accident, or other similar benefits to its members or their dependents, and its earnings may not go to the benefit of any private individual or shareholder other than through the benefits described. There are many other types of tax-exempt organizations that can be found by checking out taxtv.com.